members of the Tiger Brokers community. But it's my pleasure to be here today for you. And I'm very excited because not only it's always a pleasure, it's always exciting. But on top of that, community, we are actually going to do a bit of a change for you on the format of the sessions that we have been running in the past. So it's always a pleasure. It's always exciting. Some of my sessions before, you will see that today's session is going to be a bit more hands-on. Some of the prior sessions that we handled in the past were very educational because it was needed to be very educational. These sessions, while still very educational, will also look into market opportunities, and will also look into how to build those trades needed. A bit more hands-on, if you wish, for practice purposes, for sure. You can see the disclaimer on the upper left side of the screen. This is not a session for financial advice. This is about practice, this is about skill building, this is about dedication, and all of the above. So feel free to interact with me, guys. I am watching you on both on the YouTube channel as well as on the Tiger Broker app. So feel free to interact with me that you have for me watching you. Please do not be shy. We are here to learn together as well as enjoy the market, Tiger Broker app, and to grow. So feel free to phrase your questions. Okay. You can also see my email address to learn together on top of my picture, jose@tradictive.com. Sorry for my voice. So if you happen to be watching this recorded, you can always contact me if you anything or you have questions about the session or anything else. So if you happen to be watching this recorded, wonderful. So let's begin introduction. So we're going to be looking at key headlines of the session. I have a quick introduction to talk about who am I. Wonderful. So let's begin. Represent introduction. So first, looking at super quick speed of the light. Then we'll dive into headlines. Then we'll look for market opportunities. Then we'll do a market commentary. So beyond finding super specific trades that could be valid for practice purposes, and like I said, for learning and education. Apart from that, we'll look at the markets beyond finding market commentary to understand market conditions there. I have a bonus for you. So this is a little free gift for you all. Look at the market. If you have attended the sessions before, if you already have it, if you're new to the sessions, I'm sure you will appreciate it. Okay, so free gift for you all. Look at the market. If you have attended the sessions before, again, I am watching you guys. So please, do not be shy. Very good. So let's begin. Who is Jose Blasco? Well, that's me. I am a multi trader. I trade all assets because like everything in life, all trading assets. Very good. So advantages. Let's begin. There is nothing Jose Blasco. Well, that's me. Trading is no different. So I trade all assets because of that reason. So I like to accommodate trading assets. What advantages to do? A long-term trade, a short-term trade, etc. So I use the assets that makes the most sense and provide the greatest amount of convenience, the greatest amount of risk. Having said that, options is my favorite asset by far. I love options. I always joke, I say options give you options. While it sounds funny, it's not funny at all. It's really serious as a statement because you can do things with options that you can't do with options. So this is one of the reasons why I love them so much. Another passion in my last trading is education. So I used to be a university professor many years ago. Technology is another passion of mine. My background is engineering. So I have developed the trading technology many years ago to utilize technology force, which is another passion of mine. Also, in order to share the love more, we published last year our first book. We started with Forex, which other books will come. It's a series. Also, we started with Forex because in the end, Forex is currencies and everything we trade is a currency. Right? The first book, trade options, started with Forex in a currency too. Others books will come. So really, the book teaches you how to trade no matter what. In the end, Forex and that is useful to you guys. Trade with UFOs. I mentioned that a few times. So first of all, if you are not familiar with the UFO, really the book UFO stands for on-field orders. So if you know where the on-field orders to buy are, trade with UFOs, and you know where the on-field orders to sell are. So next thing you know, you have an edge in the marketplace because you are buying where large market players buy and you're selling and you know where the on-field orders sell. So of course, can you spot that by using a human eye? Of course not, because there's a lot of market data to be processed, and you know all sorts of ratios and ticks. Can you volume spot that by using a human eye? All sorts of things that need to be processed in order to conclude where the on-field orders are likely going to be in the market, and we plot them as flying saucers, which it's a little bit, interesting given the name UFO. So we plot them as flying saucers with two circles, a circle outside and a circle inside, where the circle inside represents the greatest concentration of orders, either red sell orders or green buy orders. With all of this said, and the headlines for today, of course, still big one, Russia, Ukraine. Very few people talk about it like a special thing anymore. Everybody knows this is happening nonstop, but from time to time, there are little spikes, isn't it? So extra bombs falling into some city that's being taken over by Ukraine. So when those things happen, often we do experience a little bit of an extra spike of volatility in the markets, even though one of the conditions that we will see in a moment when we do the report, one of the conditions that took place this year is the fact that market volatility has dropped by a significant amount. The markets are calmer. So it's looking like 2023 has been seen by market players as a less risky market environment, if you wish, even though the Russia-Ukraine geopolitical tension are there, they're much less important. By the way, if you are attending this session for the first time, and this is the first time with me, you need to know I am very pragmatic. So instead of a long list of many reasons why things happen in the market, which again, this is what you can see in any news website or any news channel on TV, if you wish. So instead, I'm just focusing on what matters the most, okay? Just very pragmatic, just pointing at what is important, okay? So US fighting inflation, again, similar to Russia-Ukraine, this is something that was very hot last year. People start talking less about it. But again, you experience levels of implied volatility on options very, very high every month when the Fed is about to make their announcement, either if they're going to raise interest rates or not, typically on the Wednesdays, isn't it? And when that's the case, you get to see implied volatility of options go up by a lot. So again, while this is a much less concerning element in the market, it is still there with a great potential of create lots of volatility on market direction. So let's say next month, the Fed will decide to lower the interest rates, and no one is expecting that the market's going to go crazy, okay? So it's something for us to keep watching and keep in mind. And then the US dollar, which was the other big player of 2022, in a session I call the US dollar the Lao Pan Yang, or the Lao Pan, depending on how you want to look at it. And you may laugh about this pretty bad joke and my accent, both. But the reality is that it's true. The dollar proved itself by going up and therefore driving everything down. And now what happens? The dollar is falling pretty hard for a while. And many of the markets have been going up, such as the S&P 500, which we will analyze in a moment. So bullish beginning of the year. Okay, the US dollar is proving itself as always, which is something that was kind of forgotten last year by many traders and investors that were focusing on things such as the Bitcoin. Nothing wrong, and certainly very relevant market, but obviously much smaller compared to the US dollar, which is present in 80% of transactions worldwide still to this day. Earnings reports for today. 88 reports will be out today. Out of those 88, I picked United Airlines, Goldman Sachs, and Morgan Stanley as the three reports that are the most relevant compared to anything else out there. Okay, so those are the reports to be watched. And certainly, if you have positions on those stocks, you should be aware of these. Probably you are. I hope you are, because maybe it was time to get out before the report or things of that sort. Okay, maybe hedging your positions, because again, earnings report often generate gaps. If it's in your favor, great. If it's against you, not so great, isn't it? So that's the reason for me to mention those three names. Okay, even though they are 88. Okay, so do your homework. Okay. Good. So we are now going to enter the meat of the session. Okay, we're going to start looking for options opportunities. So I will stop sharing the slide deck. And instead of sharing the slide deck, I'm going to start using real-time market data on the charts and plan trades. Okay, before we begin, I want to ask everyone, because typically when we start the session, some of you may not be there on time, but at this time, I would guess that everybody's here. So please go ahead and on the chat box, just type a quick hello, just so I know you are here, because as I plan the opportunities, as I plan the trades, I'm pretty positive there will be questions, and I want to make sure I don't miss anything, because obviously the planning the trades is critical in the sense that you could use them for practice purposes, as you can read on the screen. Using the trades or not is obviously your decision. Using real money or paper money is your decision. Using a large size or a small size is your decision. Again, this is not financial advice, but at the same time, I'm going to approach the process the way I do it myself when I trade, and therefore you may have questions. I'm happy to help. Okay, so keep that in mind. And again, looking to see your hellos on the chat boxes, both on the mobile app as well as the YouTube channel if you're there. Cool. And as we are moving into the charts, I also wanted to point at this QR code So grab it quickly before we jump into the charts. This QR code is the code that you would want to use to get access to AutoClimate. And if you don't know what AutoClimate is, you're going to see me use it in a moment to find opportunities. AutoClimate is a tool that helps us identify what's the climate in the market, statistically speaking. So this is not about having a human subjective opinion. This is about putting statistics in front of us. And based on stats, red tells you market is likely going to fall, blue tells you the market is likely going to go up, and then you are ready now to set your entries, your exits, your option strategies, your strikes, your expiration dates, and all of that. But the biggest mistake traders make is that they buy when it's time to be a seller, they sell when it's time to be a buyer. That's what we call being on the wrong side of the market. And AutoClimate is a tool that does a pretty good job at trying to minimize that problem, and you can get it for free by using the coupon code CLAIM8, as you can see on the screen. Okay, so hopefully you have time to take your screenshot, you have it all, and you are ready to begin. Okay, so I'm going to stop sharing my screen. You will see me, full size for a moment while I'm switching to my other monitor here, so you can see my trading platform, and we can begin with that. Here we go. Okay, so far, you guys, I have to say you have been extremely shy on the chat box, okay? A quick hello, it's something definitely that I would love to receive from you. Okay, so what do we have here? Okay, well, first of all, on the left, I have the S&P 500. I'll come back to this in a moment when we do our SMARTT market commentary, okay? So the sequence is going to be we are going to do our options opportunities first. Sorry for that one. We're going to do our options opportunities first, okay? And from there, we will do our market analysis for Tiger traders, where we're going to look at the markets from different dimensions and all of that, okay? But first, let's focus on the opportunities, okay? So now back to the trading platform real time. So what are we going to do here? Okay, well, in order for me to find valid opportunities, and save time, what I'm going to do is I'm going to use a tool called the Matrix that is built in the platform. By the way, in case you wonder what's this software, so what I'm using here is one of our, what I'm using here is one of our softwares that you can find on our website. Is called the Predictive Options Planner. We call it TOP for short. This is our top platform, which is the Predictive Options Planner. So what this does is it plans options trades for you automatically. Even if you have a limited knowledge about how to trade options, it will build spreads for you with the right expiration date, the right strikes. Everything is adjusted for you automatically, as you will see in a moment, and that will save you plenty of time and plenty of mistakes as well. So hopefully you appreciate that. Okay, but now, what type of opportunities are we going to be looking for? Well, as we go, we're gonna run multiple sessions every month. So as we go through multiple sessions, I will be exposing you to different things. But today, since we are kind of at the beginning of the week, so what I wanted to do is I wanted to focus here on weekly bullish and weekly bearish candlesticks. Okay, so I'm going to be looking first at bullish weekly dojis. Okay, and if you don't know what that is, I'm going to show you in just a moment. And we have a few stocks here that show that setup. So take a look. If I enter ACI and I look at a weekly time frame, okay, so as you can see, if I zoom in, okay, maybe it's better if I zoom in like that because it's a really tiny doji. So we have a doji right there, and the beginning of the week is a move to the upside. Okay, so my intention will be to catch this move to the upside, especially given the fact that this move may continue all the way to 24. Okay, so I would certainly like to make $3 on a $20 stock. That's a over 10% movement. That would be great. That's like a 15% movement on the stock. So that would be beautiful, right? So again, because today is Tuesday, so again, this blue bar is already happening. But if you scan for these, let's say over the weekend, for example, you would have your doji, and when the market opens on Monday, you are ready to catch this move. Okay, so this is the type of opportunity that I would like to exploit today. Now, to make this a bit better, instead of relying on stocks only, I would also like to rely on some power from the sector itself. And to explain that better, what I'm going to do is show you the group rotation here, okay? And when it comes to the group rotation, if I zoom in, So notice that we have, this is the S&P 500 in a daily time frame, and then we got basic materials, consumer goods, consumer services, financial, healthcare, industrials, oil and gas, technology, telecommunications, and utilities. So those are the key sectors in the market. And something I always say, which is very important for you to remember because it's so powerful, I always use a term that it sounds counterintuitive. I always say stocks are fragile. And that made me make you feel that that trading stocks is a mistake. And actually, it's not at all. Okay, stocks are fantastic to trade. We got around 9,000 stocks in the US market. We can find extremely unique opportunities, and with options even better. But they are fragile, meaning that they depend on competitor companies, they depend on their industries, they depend on their groups, they depend on their sectors. And sometimes you may have a very good company ready to have a push, but then maybe the sector is dropping because, 5 of the main competitors are dropping. And next thing you know, that company doesn't manage to rise in price. That stock doesn't rise in price because the whole sector is moving in the opposite direction. So what I would like to do is I would like to stack in my favor the sector. So if I get a move out of a weekly doji in this particular case, okay, and we look at other setups, okay, this is only one type of setup I will share with you. I will share many more. So if we were to look at a move out of a doji on the weekly time frame, and we catch a move of 15% on the stock, well, in order to increase the probability of this to happen, I would want to have the sector in my favor, okay? And so that is going to accomplish by doing two things. Number one, either focusing on sectors that are already in a strong mode. For example, you can see how oil and gas, industrials, financial, basic materials, consumer services, and telecommunications are showing blue, okay, or gray, okay? But they are not showing flat, and definitely they are not showing red like consumer goods, okay? I don't want to be in that sector if I plan to be bullish. I don't want to be in that sector, okay? So another concept that I would like to expose you to is this concept of rotation. That, for example, telecommunication, right? It's already in the blue for a while. So that's good because you have a lot of confirmation is moving in that direction. But at the same time, the momentum will be likely going down or dying off, if you wish, because, since that market has been moving in that direction for a while, probably there is profit taking, money flow from some sector to others, etc., etc. Okay, so a good idea when it comes to picking direction from a rotation point of view, it's to pick industries that have just rotated. They were red, they went flat, and now they are coming into the red, and in this case, into the blue. And in this case, we're talking about oil and gas. I mean, industrials did that 3 days ago. Consumer services did that 3 days ago. Financial did that 4 days ago. So again, there are many industries that, are starting to have momentum. I would say telecommunications is the worst because it's been already like that for a few days. But definitely trying to catch the beginning of a move from the earliest as possible, which is my attempt. I would certainly like to focus on oil and gas, okay? But I'll give myself a bit more flexibility as I do the filtering. So how can you do that? Well, here I can copy into group rotation and be like, look, I want the rotation to be up, and I want it to have happened maximum 3 days from now. And with that, I can now see how, for example, ACI, which is the stock we just saw a moment ago, it's a valid candidate, actually, because ACI belongs to consumer services, which is one of those sectors that created that move, okay? So not only we have this weekly doji formation on the weekly time frame, on top of that, that stock belongs to a good sector that is now rotating. So if the whole sector rotates, it will increase the probability for the stock to continue moving higher together with its sector. Okay, well, then if that's the case, how do we plan an options trade around that? Well, the easiest way to do it is I'm just gonna come here to 24.33. That would be the target, and I'm just gonna send this price point 24.33 to the strategy builder, and the moment I do that, an options trade will be built automatically for me here. Okay. Now, before I analyze this and I tell you how you could use that, I want to point out something important, which is the fact that when I got my opportunities, ACI is a stock that is currently trading at $21.34, where other stocks, for example, ACN are stocks trading at $280. So again, when practicing, right, which is the purpose of this session today, so you always need to keep in mind risk management. And of course, if your account is very large, so you will be able to attack and utilize stocks of a higher price point. If your account is smaller, then utilizing stocks such as ACI, $21 per share, probably will make more sense, okay? In any case, no matter the price of the stock, as you probably know, depending on the option strategy that you use, you may have more or less risk attached to the trade. Example, if you sell a naked call on a stock, no matter the price of the stock, you have unlimited risk, isn't it? You may have learned that if you have taken some options training before. Let me take a look at the chat box before I continue. I can see Chua1, how to deposit. Well, actually, unfortunately, for that, I cannot really help you because I am here to conduct an educational session and I'm not fully aware of all the different possibilities on how to deposit money. But I will tell you that you have a chat service built in the app. So if you leave, our session, don't do it now, do it after, right? But if you leave our session and you go use the chat service to talk to the support team, they will guide you on how you can deposit. Okay, so it's actually a very simple process. You can do it very easily. Okay, unfortunately, I cannot guide you because I'm not an expert in that matter. But again, the support team will do that. Anyway, coming back to the trade here. So what I was saying is that the price of the stock will have a direct impact in risk, but also the option strategy that you use will also have a direct impact in risk. So what you may want to do here is, the strategy builder has built a collection of option strategies here for me to analyze. But before I look into that, what I'm going to do is I'm going to set a maximum risk. And let's say you tell me, look, I want to risk maximum $100. Okay, so I'm going to update. And now notice that my list has been cut short to only these particular ones. And now what I could do is sort them based on return on investment, okay? And this will be my trade, okay? And to be honest, in this particular case, the trade is very, very simple. We have one trade here that would provide 324% rate of return with a maximum risk of $100, and this is just buy the 22 call, okay? Very, very simple one. In this particular case, it's a very, very simple trade, okay? So you know what? Let's do it. Let's call this our first trade of the day. And what I'm going to do is, just one second, I am going to bring in, here we go. I'm just going to bring in this to the screen so I can help you understand this better. So we are trading ACI. Earnings for ACI, this is an important piece of information to not to get in trouble. So I'm just going to add study earnings. Okay, and I need to switch to the daily time frame for that. So earnings on ACI just happened. So the next one will happen all the way there on April 11. Okay, so we got plenty of time before that happens. Okay, so we are going to let me make this always on top. So we're gonna use April 11. Okay, that will be 2023, and expiration date July 21st, 2023. That's the expiration date. Where do I get that from? Right there. Okay, the strategy builder is telling me that, and what we're doing here is that we're gonna buy the 22 call. That's the trade. Okay, so entry point in this particular case, I'm just gonna leave it blank, and I'll explain why in a moment. The risk per contract is around $100. So make sure you get filled at $1 or less, because if you get filled at $1 or more, then your risk would be more than that. But again, the timing of the trade is adequate for the trade to be taken in the sense that, number one, the current price is above the prior high, okay, which is the typical technique on how to accept a doji breakout. So you want price to go above the prior day of the prior candle high, which we are above, so time to go in. And on top of that, as an extra confirmation, we got a green UFO show up, which is now increasing the probability that if ACI was to move against us, the moment it comes to the UFO, then ACI will be likely going back up. So great setup, to be honest. Again, one more time, this is not financial advice. Just make sure that you understand what I'm doing, you manage your risk, you understand the parameters on the screen, and if not, feel free to ask questions. I'm here to help. But yeah, this would be the plan. Okay, so entry none, and exit, okay, if we get above or equal 24.34, so it will be time to exit this trade. Okay, so if you want to take a screenshot out of documenting this a bit more, and hopefully helping you with as the market opens in an hour and a half, you loading real-time data and kind of being able to redesign what I put on the screen here on your own computer screen or on the Tiger Broker app. So maybe a screenshot would be handy for you. So you can do that if you'd like. Okay, good. So now I'm gonna change to another opportunity. Okay, so we can talk about various things. So I'm gonna close this now, and the next opportunity I would like to talk about, it's kind of like the opposite. So we just did an opportunity to go long. Maybe you tell me, hey, Jose, wait a moment. I have multiple long positions in my portfolio already. I don't want to add another long. I tell you, I would like to enter a short for a hedge. So let's say you are long 10 stocks, and maybe you enter 1 or 2 or 3 stocks short, likely going to lose. But if the other ones are moving in the opposite direction, then overall your portfolio makes money. And if the market was to collapse, those short positions may offset some of the pain. So if that was the case, maybe you would go for weekly bearish candlesticks. I'm going to be looking for dojis. Okay, and now, of course, I would want the group rotation to actually, there are no dojis on the, let me see. Yeah, no dojis on the weekly time frame. Okay, good. Got it. Which, by the way, makes sense because the market has been pushing up in the last week. What about bearish engulfings? So I'm looking for bearish formations. What about dark cloud covers on the weekly time frame? I got one. Okay, let me see if I can find something else. Hanging mans. I got one. What about bearish haramis? I got a few. Okay, so maybe this would be the right one for me to use. And then, just as before, using a rotation that started, maximum 3 days. I did before. I don't think that's going to be the case, but let's see. No. So in here, I will want to rely on a sector to be on the downtrend for the long term. And let's see if that would validate. And it validates me with Walmart, okay, which is a great stock to trade. So let's go ahead and take a look at Walmart. On the weekly time frame, we're going to be seeing this, this formation. So we are dealing with a bearish harami. So a bearish harami means that the body of the current candle fits inside the body of the prior candle. Baby candle inside the mom's belly, if you wish. Okay. In Japanese, I believe harami means a pregnant woman, and not the same in Hindi, which has a very different meaning, which I will not mention here. Anyway, so we have the formation. Okay, and in this case, I am a bit hesitant to hit this trade the way I immediately executed the other one, because the green UFO here is located all the way at 117. Okay, so in other words, if the price was to fall from 145 to 117, I mean, that's the trade of the year. So could that happen? Of course, but that would mean that we are betting on a whole down year for the whole year. And because I was looking at this trade as a little bit of a hedge for a long portfolio, so instead of looking at UFOs on the weekly time frame, I want to look at the daily time frame, and yes, much more reasonable UFOs. They are located at 137. So I want to do the same thing, send to strategy builder, and now the strategies are being built. And again, same story. Maybe you want to set your maximum risk. Now here, I believe if I set $100, I may not get anything because this is a higher price point stock, so no results fund. What if I do $300 of risk on this one? Update. So now I got some results. Okay, what if I do 200? So again, all of these, I'm just playing here with the numbers just so you see the various possibilities, but that, of course, all those parameters will depend on your risk management rules based on your trading plan. So here it seems that the best choice would be a bear put spread, okay, using the March expiration, using two puts, the 140 and 137, that will produce 127.4 return on investment. Of course, I didn't say it before, this is assuming that we reach the target. Okay, if we don't reach the target, then of course, forget about it. If it goes against you, you're gonna lose. Good news, the most you can lose is 200 because these are limited risk option strategies. Okay, so this is a bear put spread. So let me open a sticky note here so we can document this trade in a proper way. So you guys, again, can replicate that on your computer screen and always on top. I was looking for that. Sorry for that. I got distracted. You guys can replicate that on your computer screen, and therefore for practice and learning, this could be a good one. Okay, so expiration date March 17. That is earnings. Let me rectify that. Okay, so earnings for Walmart happening here on February 21st. February 21st, and this is made of puts. So the way we would handle this is we buy the 140 put. That's the higher strike. And we sell the 135. Okay. Entry, again, no need for any rule, since we have said that this is for hedging purposes in this assumption. So you could just enter the trade now and exit whenever this market reaches the target, which in this case would be 137.41. So this would be a valid place where to close the trade for a profit, in this case, a profit that would represent 127.4 return on investment. Okay, so this is the sticky note for you to take a screenshot as well. And we just did a trade to be bullish. We just did a trade to be bearish. We have one of each. And again, so much more to come in future sessions as well. But before we conclude today, it's time for me now to go through the SMARTT market analysis, looking at the S&P 500 index, so we understand the market overall. Okay, so now I'm going to move from specific trading opportunities to market analysis, so you understand what's happening out there. Okay, I will just take a sip and I will continue with the session in just a second. Okay, I got it. So I am now going to close this and focus on the S&P 500. Good. So what do we have when it comes to the S&P 500? Well, first of all, I would like to start doing my analysis using the chart that I have on the right. Okay, and if you look at the chart that we have on the right, clearly we can see that the S&P since the beginning of the year has been moving higher. Okay, pretty nicely actually. Okay, from these price points all the way to here, that is not bad. Okay, not bad as a move, and we are indeed in a up climate, which is confirmed. This is, by the way, I didn't mention before, this is auto climate that earlier I mentioned. You can have your own auto climate for free for TradingView. You also know that TradingView can be connected to Tiger Brokers, isn't it? So I will just come in here. So you get the link and the QR code one more time in case you need it. Okay, you got the auto climate here. You have the book on the right. The book is $3.88 if you buy it as an ebook, or $18.88 if you buy it as a paperback. And it gives you access to auto climate and auto UFOs during 3 months. But in any case, you get your auto climate for life using the coupon code CLAIM8 and that QR code, as you can see on the screen. Okay, so get that. So now coming back to the market, so the climate is telling us that we are in a market, and this is why statistics are so important, and that's what I mentioned before. We have a little note of caution here. The climate has already reached the count of 5, where statistics suggest that 5 is a normal thing to happen. is a one standard deviation. In other words, a normal thing to happen. In other words, today is going to be count number 6 when the market opens in an hour and a half. And therefore, now we are surpassing what is normal, and we start falling into what is less statistical, less probable. Okay. So in that sense, we need to keep it easy when it comes to building positions. That's why a moment ago I mentioned to also use a hedge, isn't it? Because, could it keep going from here? Of course. But statistically, based on auto climate, we may get a retracement of 3 days, red climate, and from there continues. Okay, this would be more likely. Okay, so we will be observing that. Okay, now also lots of indecision at this moment in time. This has not happened since a long time ago, but notice how implied volatility for the calls, blue color, and the puts, gray color, is equal. In other words, the amount of people buying and selling calls and the amount of people selling and buying puts are doing it with an intensity which is basically equivalent. So there is no clear trend coming from the options data markets. We can rely on the auto climate, but I love to reconfirm auto climate with options data, which today I cannot do because we got the same reading. So it's a pretty much indecision day. Those indecision days, they often lead to breakouts in some direction. So we may have a very fast continuation of the move, which is unlikely based on auto climate, but it could happen since we got the implied volatilities to be equal. Or more likely, I would say, a move to the downside, probably quite violent, lots of profit taking, quite violent. But again, statistics suggest it's going to be a short duration move until the market goes back higher. Okay, so this is what we are dealing with in this particular moment in time. Okay, so now a bit of looking at the futures markets before the market opens. So futures are going to open up 0.39% at this moment in time. Now notice how we have these green UFOs here. So if the market tries to go down, sorry, this is not futures. My mistake. Futures is here. Here we go. Okay, that's better. So we got UFOs here all the way at 39.70. So we have UFOs, but it may take for the market to come back down. And again, reinforcing the concept of a retracement. So even though we're going to have an opening, which in this case, and I said it wrongly earlier, I apologize for that, the opening is going to be negative, minus 0.22. So following that down opening, we may have some violence to the downside, but when we reach those UFOs, 39.70, which are lining up, more or less with this bottom UFO here, okay, 39.6, more or less 39.7. So we may see some reaction and price going back to the upside, or maybe not. Maybe we will have to have these 3-day climax to the downside, maybe reach 390, and from there come back higher. So we're going to have to look for it. We're going to have to wait for the auto climate confirmation going from blue to red and back from red to blue, in order if we want to, not to rush and not to get in trouble by being, the first one taking the trade, even though, of course, being late to trading is also a problem. But being a bit too early may be also a recipe for trouble, okay? So looking for a bit extra confirmation. And with all of this said, really, this is what I would like to mention about the market analysis. I'll do one more analysis here, looking at volume data. Okay, so this represents the volume of options. And again, talking about the fact that implied volatility calls and puts are equal, and the battle is very much equalized. You can also see that in most of the expiration dates, okay, so this is Jan 20, Jan 23, Jan 24, Jan 25. So this is multiple days, right? So you can see how we surpassed that little triangle that represents the 5-day average of call trading and 5-day average of put trading, on gray for puts, blue for calls. So we surpass it for the calls and for the puts. So equal fight calls and puts, equal fight calls and puts, equal fight calls and puts, a little bit more of the put, but then equal fight calls and puts, a little bit more of the calls, equal fight calls and puts. So again, you get my point, isn't it? Very much of an indecision day if we were to analyze options data coming from the options markets, which today are not giving us any additional specific edge. Therefore, caution is suggested when it comes to seeing that climate to redefine itself and getting to see if the calls or the put are the ones now getting the leadership of what's going to happen in the market, being bullish or being bearish. With all of this said, it's been my pleasure to conduct this first session of the year. Hopefully you guys have enjoyed the construction of the two trades that we put together, the debit spread on Walmart, as well as the long call, simple options trade, long call on ACI. So hopefully that was fun for you to see how it was built, and you understand the rationale and how the trades were found and everything else. Again, as said, my pleasure to be here for you guys. Thank you so much, Tiger Brokers, for inviting me to join your ecosystem and being part of it. I really appreciate and really love to be part of what it's being done here with Tiger Brokers. And for you all as well, you have my email again on the screen, jose@traditive.com. Please go ahead and take a look at our social media pages and like us and all of the above, subscribe and all of this. And most importantly for yourself, make sure you don't miss your auto climate, as it is a pretty powerful tool, I would say. I use it myself for trading, for my own trading, and again, keeps you out of trouble many times. My pleasure. See you all in the next one. See you then. Bye-bye, everybody. Take care.